Welcome back to Market Matters Media, where we unravel the secrets of the financial world. Today, we're diving into the fascinating story of an investor who had shown legends like Warren Buffett and George Soros. Stick around because by the end of this video, you'll discover the unparalleled strategy that made him the king of Wall Street. Imagine achieving returns that make even the likes of Warren Buffett raise an eyebrow. Today, we're delving into the world of the legendary investor who not only beat the market but left the competition in the dust. Forget everything you know about traditional investing because what we're about to unveil is nothing short of extraordinary. But before we jump into the heart of the matter, make sure to hit the subscribe button if you're enjoying this content. We've got a treasure trove of financial insights coming your way, and you don't want to miss out. Now let's dive into the secrets that revolutionize the way we perceive investing. Our protagonist is Jim Simmons, a mathematical genius who redefined the game. Simmons, unlike his peers, didn't rely on gut feelings or emotional roller coasters. Instead, he harnessed the power of quantitative analysis. And in this video, we'll explore 7 key strategies that propelled him to unimaginable heights. In the early 80s, before quantitative analysis became a buzzword, Simmons took a conventional approach. He relied on fundamental and technical analysis, blending intuition with homemade systems. However, he quickly realized the emotional toll and uncertainty weren't sustainable for long-term success. Simmons hungered for a foolproof method, leading him to the world of anomalies. His team gathered vast amounts of data, searching for consistent oddities that could be exploited. Picture this: every Christmas, a certain stock rises predictably. Simmons didn't care about the reasons, he cared that it happened, and he profited handsomely. Early on, Simmons tapped into the power of trends, especially in commodities. By identifying short-term patterns in market prices, he made strategic trades, capitalizing on the upward or downward movements. However, as others caught on, he needed to evolve. Enter reversion-predicting signals, where Simmons' team focused on patterns of a stock reverting back to the average. Each data points like revenue, book value, and PEG ratio. They identified recurring patterns, profiting from the inevitable fluctuations. Simmons knew he needed a team of geniuses. Instead of hiring traditional finance minds, he recruited PhDs in math, physics, astronomers, and statisticians. These brilliant minds weren't just employees, they were partners, incentivized to make the fund as profitable as possible. In the mid-80s, Simmons' team identified ghost patterns and leveraged them by borrowing money to trade. Reports suggested they borrowed $17 for every $1 invested, amplifying their returns and putting the fund on financial steroids. Unlike traditional investors, Simmons' team approached the market like a science experiment. They focused solely on the numbers, eliminating emotions from the equation. This approach, coupled with their IQ workforce, created a winning formula. Before we unravel the remaining secrets, take a moment to subscribe to Market Matters Media if you're enjoying this deep dive into financial strategies. Now let's continue our journey into the mind of financial genius. As Simmons' fund grew, so did the rise of machine learning. Simmons incorporated this technology to analyze vast amounts of data, making predictions and decisions at a speed no human could match. Machine learning became the X factor that kept him ahead of the competition. Now let's delve deeper into the game changer that propelled Jim Simmons into a league of its own: the integration of machine learning and artificial intelligence. As Simmons expanded his fund, he recognized the incredible potential of these technologies in predicting market movements. Simmons leveraged machine learning's ability to process vast amounts of data swiftly. Imagine a supercomputer analyzing thousands of different moves in the stock market simultaneously. This technology allowed Simmons and his team to identify patterns, correlations, and anomalies at a speed and scale that traditional methods could never match. The beauty of machine learning lies in its ability to learn from historical data and continuously refine its algorithms. Simmons' models became increasingly sophisticated, incorporating complex signals and unity trades. The machines were not just crunching numbers, they were evolving, adapting, and becoming more effective with each passing day. Simmons understood that while humans are limited by the time it takes to test a single hypothesis, machines could test millions in the same time frame. This competitive edge allowed him to stay steps ahead of the market, making strategic moves based on data-driven insights that were simply unattainable for others. As Simmons embraced machine learning, algorithmic trading became a cornerstone of his strategy. Algorithmic trading involves using pre-programmed instructions to execute trades, eliminating human intervention and emotions from the process. For Simmons, this meant precision and consistency in implementing his proven strategies. Simmons' algorithms were designed to analyze market conditions, identify opportunities, and execute trades with fractions of a second. This lightning-fast approach not only maximized profits, but also minimized the impact of human emotions, a factor that often leads to irrational decision-making in the financial world. Algorithmic trading allowed Simmons to capitalize on fleeting market inefficiencies that human traders could not exploit in real time. It was like having a team of tireless and emotionless traders working around the clock, ensuring that every profitable opportunity was seized. But as the financial landscape evolved, so did Simmons' strategies. The success of his early techniques drew attention, and competitors began adopting similar quantitative approaches. To maintain his edge, Simmons and his team continued to innovate. One crucial aspect of Simmons' adaptive strategy was a constant refinement of algorithms. Machine learning models were regularly updated to incorporate new data, market trends, and the ever-changing economic landscape. This adaptability allowed Simmons to navigate through various market conditions, from bull markets to recessions, with remarkable resilience. The ability to quickly identify when a strategy was losing its effectiveness and promptly adjust course became a trademark of Simmons' approach. This dynamic approach of trading ensured that the fund stayed ahead of the curve, always positioning itself to capitalize on emerging opportunities. While the spotlight often shines on the staggering returns generated by Simmons' fund, one often overlooked aspect of his strategy is meticulous risk management. Simmons understood that even the most sophisticated models could not predict every market movement accurately. To safeguard against unforeseen events, Simmons implemented robust risk management protocols. These protocols included setting limits on the size of individual trades, diversifying across various asset classes, and employing sophisticated hedging strategies. This disciplined approach ensured that, even in times of market turbulence, the fund remained resilient. Simmons' emphasis on risk management wasn't just about preserving capital. It was about ensuring the long-term sustainability of his strategies. It's a lesson for all investors. The road to success in the financial markets isn't just about making gains. It's about protecting what you've earned. As we wrap up our exploration into the genius of Jim Simmons, it's essential to recognize the lasting impact he has had on the world of finance. Simmons not only amassed unprecedented wealth, but also reshaped how we perceive and approach investing. His legacy extends beyond the billions he accrued. Simmons proved that the combination of mathematical genius, cutting-edge technology, and a relentless pursuit of innovation could defy conventional wisdom and achieve unparalleled success in the financial markets. Thank you for joining us on this captivating journey into the strategies that made Jim Simmons a legend. If you haven't already, hit that like button and remember to subscribe to Market Matters Media for more in-depth insights into the fascinating world of finance. Until next time, happy investing!